my name is, okay, recording in progress. So my name is Tara Brown. I am the Associate Director at the Western Women's Business Center. And if you are not familiar with us, we provide business development services in 24 counties of Western North Carolina. So we offer one-on-one business coaching. Candy, who's leading our training today, is one of our coaches, and she has a specialty in accounting, obviously, financials, that kind of thing, which I know a lot of us need help with. I know if I had a business, I would need help with. We have coaches with other expertise like marketing, business planning, all kinds of things like that. Whatever you need, we're here for you. We also offer about once a week different training like this on all different topics, same kind of thing, marketing, business planning, preparing for a business loan. So definitely check out our upcoming trainings, and you should be signed up for our newsletter by coming to today's training. So you'll get alerts on events that are coming up. And then the last thing that we offer is access to funding. So we are a program of Carolina Small Business Development Fund. They are a statewide community development financial institution. And that means that they give business loans. If you haven't been able to qualify for a loan at a bank, we might be more flexible than a bank. And it's our mission to support underserved businesses like women entrepreneurs, people of color entrepreneurs, people in rural areas that don't have access to the same funding. So we are here for you. And without any further ado, I will pass it over to Candy, who's going to lead our training today. I just wanted to make sure everybody knew about us and knew that Candy is here for you for one-on-one coaching. If you're like, okay, I still need help with this, we're here for you. So and Candy is going to lead us today in the QuickBooks training on understanding customer transactions. She's a QuickBooks Pro Advisor. She's worked with us for many years, and she is definitely expert in this, and we are happy to have her here today.
Thank you, Tara. I want to welcome everyone, and I want you to, first of all, I want you to breathe. Just relax, because this is going to be, hopefully, we're going to get a lot of information in, but hopefully it will be relaxed enough to where you can feel all right about what you're hearing. I know that when I first started my business 21 years ago, and I had never used QuickBooks. I was a bookkeeper. I've been in the bookkeeping business for a lot of years. And I had worked in different places, but I had never owned a business. So when I went into business, I thought, wow, everybody's talking about QuickBooks. I think I will buy it. Well, it was different than it is today. You have a lot of choices, but I don't know if you remember the old DOS, which was the black screen with the blinking cursor, and you had to use the software. Then that was what I had. And I had a menu that you pull down, and I had to choose. And I didn't have any idea what I needed to do to get started. Now, like I say, I was good at computers and software. So I thought, well, if this kind of makes me confused, of course, I probably said other words, but that if it kind of made me confused, people that have never even looked at QuickBooks, going into business, having to do their own bookkeeping, then it might be confusing to others. So I trained, became a QuickBooks Pro Advisor so that I could help people starting out in business, or if they wanted to work in a business that would actually use QuickBooks, and they needed to know that before they actually, even they wanted to put it on their resume, I guess. So I hope today answers all your questions. And if not, then you are welcome to call, kind of talk with the Western Women's Business Center, and they'll sign you up for some one-on-one training. And I will probably be, your coach. So like I say, also make notes as to what questions you have. Now, it would be best if we ask questions pertinent to what we're working on at the time, but there will be, hopefully at the end of the time, you'll have time to ask different questions. that you might have wanted to ask. So anyway, here we go. I want to make sure that everybody is okay with it. Now, if you do not have QuickBooks Online for now, and you are thinking about getting QuickBooks Online, and you're going to be working with me today, you can Google QuickBooks Test, and it will bring a test drive, and it will bring up a link that you can click on so that you can actually see what's on the screen that I won't be managing your screen, but my screen, you'll be able to see exactly what I'm doing. And other than that, you'll be able to click on things so that you can actually go further if you want to. So, okay, so everybody, are we breathing? And like I said, don't let it concern you if you feel a little overwhelmed, because that's natural. Like I said, I was very overwhelmed. Okay, so what we're going to do is we're going to start with the home screen. And we're going to look at several different things. This is your dashboard. And I know that you have seen other applications that have dashboards. It could be your security. It could be your bank. It could be, but anytime that you have many choices like this, and it's the first screen, it is called the dashboard. Now, from the dashboard, you can do many things. And so once we go over everything, then you're going to see that you can, what you can do. And then you're going to be able to recognize what all these little icons mean. Some of them they do something, and some of them try to sell you something. So you just, if you don't want to buy it, then you don't buy it. By clicking on it doesn't make you buy it, but agreeing does. Okay, so here's your dashboard. Now this screen we call Get Things Done. And what that is it's going to allow you, I should say, to start as far as when you set up your own QuickBooks. You are going to be able to see this screen, and it will help you and guide you to, like connect, start invoicing, connect with your accountant, different things like that. You also are going to add a customer. I'm going to show you how to do that if you aren't using this, so that you have access to it. But this right here is great. And they haven't always had this. When QuickBooks Online started, it was just like so different from my desktop that it took me a little while to learn how to navigate. I don't know, it's kind of like getting a new car, I guess. Not everything's in the same place. But it's there, and all bookkeeping doesn't change. But the applications or the software, they can change. But everything that you do is come down to the bottom of the line, whether or not you're making a profit. And that's the big thing we want to get to. All right, so if you'll look, there's another view, business overview. Look at them pretty charts. They are there so that you can, if looking at just totals and numbers are something that you want to do rather than looking at a lot of detail, this will help you to see where you are now. And of course, this is the profit and loss, which is actually a financial statement, but it shows how much money you had come in and how much money you had go out. And this was your positive profit. Now, if you had not made a profit, it would be a negative. Then it comes here and it explains the expenses and it breaks it down. You can break it down further to where you see that where it says $755 maintenance and repair. Well, that is something that you can drill down even from this. This shows you invoices where people owe you money. And these are the ones, like it'll tell you how many are overdue. So if you send out invoices and let's say you give them net 30 and they don't pay, it's going to, and I'm going to open this up so you can see it, it's going to tell you who and how much and how long. So that's, that is something that is the tool that will help you to analyze what's going on. You also have this not due yet, and you can look at it just if you just want to even see if you actually invoice somebody, and this is where you want to go check it. There's going to be many ways to do everything that you do. All right, next is going to be, these are the people that paid, but you got the money and you told QuickBooks you have the money, but you have not put it in the bank yet because you don't want to acknowledge it until you know when it went into the bank, or if you're going to combine, if you're actually going to combine your deposits together. And we'll go over that too. So this is actually this part. This is an important part right here. These are your bank accounts and credit cards, and these are linked to the bank account or the credit card account. And what happens is when QuickBooks Online is not desktop, you have to request the download of your transactions, but QuickBooks Online, you can just let it download your new transactions from the bank or credit card every day. And so that keeps it up to date to where you know what your bank balance is, and that doesn't look good, does it? But and then QuickBooks balance, which says they have $1,201. Well, so why does QuickBooks say it, and then versus the bank account? And this is where it kind of alerts you that you need to check something. Are your balances going to be exactly the same always? No, because you may have something in your QuickBooks register, bank account register, that the bank doesn't know about yet. Maybe you have an automatic transaction that you have every month, and you have it listed in your QuickBooks to go ahead and say, yeah, this is what I'm gonna pay, but the bank hasn't acknowledged that they've paid it yet. So there's many things that could actually make this happen. You also have in the savings account, they have a bank balance and they have a QuickBooks balance, which means they took some money out. Then this alerts them that that there's difference, and then they go in and see why. We also have your credit cards. These are more complicated, and I wouldn't say complicated is not a good word because I don't want to scare you there. But this one is more, you have to understand that your credit card, if you do a credit card charge, then it's probably going to take 2 days for it to register. And I think a debit card does it that day. But that could be the reason why, or maybe you mailed in a payment, or maybe you made a payment to come out at a certain time. Then your QuickBooks may already acknowledge that, but the bank, the MasterCard hasn't got it yet, or they haven't. So this is the things that are kind of very important, because these are where your transactions are. All of your transactions involve money, and most of them involve, the bank and maybe the savings account and the credit card. But these are the things that will also, as these transactions go in, it affects your bottom line. So yes, we're gonna go through that, but I wanted you to see that this is where a lot of people feel overwhelmed, is when you're downloading transactions and you're looking at those transactions and you're deciding whether they're true or not. It's kind of like looking at a bank statement, but it's digital. And so when these download, and I'm going to show you one real quick. Then you have your accounts here. And if you'll see here on checking, where you can tell where it's been, I have selected it. And you'll see here, and I'm gonna, let's see here. I think I'm gonna, I'm going away because I can't see. It's in front of mine. So if you'll see, you'll have lots of things here, but mostly this is what you're supposed to review. Now, most of them, if you do not use the QuickBooks Register to enter your transactions before you download them, then it's going to have where you can add it yourself. And then you're going to choose an account, which is our next stop, the chart of accounts, and you're going to be able to add it. If it's something that you already have in your QuickBooks, it's going to say, see where it says match? Then you can open that register and it'll give you the options of matching it to, so you can match it. If you go in and you just add, whether you have, if you just add and you aren't sure, you might have already entered that transaction, then what's going to happen if you were to add all of these, but they were already in QuickBooks in a different way, then you've added something twice, whether it be a deposit or an expense. And we are going to go into that more fully. But like I say, I just want to make sure that you understand that this can be where your problems are. I've worked with clients, and I worked with one recently that, and she had someone else. I've got to let you know, she's had someone else doing it. She thought they knew what they were doing, but they didn't understand the download. So if you don't understand the download and you start letting your transactions go into your books, because these are not in your registers yet until you tell them. Okay, let me see what I got here. I got a little chat, so I'm gonna catch up on that. Hold on. Okay.
Candy, do you want me to read the questions, or are you okay?
I'm just going to browse through these for just a moment.
Okay. Amy has a question at the end.
Okay. All right. I see that where Amy, QuickBooks including my estimates in the QB total. Hey, Amy.
Hey.
Your estimates should not be in the QuickBooks total because we call an estimate, it's a non-posting. That means that you've got a record of it, but they haven't agreed to it yet. So that should not be in there. Now, once you take that estimate and you decide you want to make it into an invoice, which you can do through QuickBooks without having to enter the information, then it goes into your accounts receivable. Does that help?
Yeah, my QuickBooks balance suddenly has become wildly different than my bank balance, and I've been trying to pinpoint why.
Well, I tell you what.
It's including estimates, but once we get through all this, maybe I'll see other.
Okay, and you might, but if not, get in touch with the Western Women's Business Center and tell them that you need some coaching, and you and I can do Zoom, and you can share your screen with me, and we can look at what's happening, okay?
Thanks.
Oh, you're welcome. All right. Will you alert me, Tara, if I have a question that really needs to be answered right away?
Yes.
Okay, thank you. Okay, so like I was telling you, then this is what, this is non-posting. This just means we have a record of it in our QuickBooks, but it's not actually posted to the books yet. It's kind of, if this is what really happened and you haven't already put it in there, then we'll put it in there. So that's the thing there. All right, I'm gonna go back. And we're gonna look at, let's go to get things done. It won't make any difference, but if you'll look on the left, we have our list. And this is different things that you are able to do from this menu. Things to see, things to do, whatever. But you also have down here, we see where it says My Accountant. you can invite your accountant by sending an email to them, and they can actually log into your books without them being a user, just go in as an accountant, and they can either make corrections at the end of the year. They have that to do your taxes, and there's no taking in your paperwork, especially if it's in a shoebox. I don't know if any of you do that, but I've known quite a few people that did until we got QuickBooks. But a shoebox means that they've just thrown them in there and they're hoping the accountant can sort them out. So we have that. So that's going to be something that might be to your advantage. Not all accountants have QuickBooks Online, but most of them do now. At one point, it was the accountants were not really open to, a matter of fact, when QuickBooks first started, some of them, and I won't say all of them, but some of them thought that the books weren't detailed enough because, you know, they have accounting software. But it's user-friendly, and it gives them everything they need for taxes. So little by little, they went ahead and accepted it, QuickBooks Desktop, and then it was time for QuickBooks Online, and not everybody, all the accountants jumped on board with that either. Some of it was that the layout was kind of complicated when it first happened, but this is a very good software. It is. I would not recommend it. Yes, I'm a QuickBooks Pro Advisor, but I do not sell QuickBooks. So I would not give them this endorsement if I didn't know that it was a good software to have and that it would be user-friendly for you once you know how to get around. Okay, so we have the dashboard, which we see. We have banking, which takes us to that screen we saw before that lets us look at the transactions. We have the sales center, which will let us do anything related to sales, such as invoices or sales receipts or deposits, receive payments. But we can also set up what you sell, if you'll look at that, products and services. These are the things that your business sells and receives money for. Now, why does you have to even have that? Because if you want to get a detailed report as to what you sold, when you sold it, how much you sold it for, and who you sold it to, then you need to set this up to go into your invoices or sales receipts, because just making a deposit will not give you that level of detail. Expenses, same. These are where you do everything that has to do with writing a check or paying something, and also where your vendors are. We're going to skip projects and payroll. Time is if you want to track your time that you are working with someone, or track your time that or employee track their time so that they can you can have it to do your payroll with. You want to have it, it's like a time card. Reports, very important. We'll go with those towards the end. Taxes are, if you have sales tax, this is where you see, let's set up your new and improved sales tax center. This is where you would get started, and it will actually help you with a step-by-step menu so that you can track tax for your business. If you sell online, you may not have to collect tax except in your state. But they will let you know the rules. Mileage, if you want to keep track of mileage so that you can be reimbursed for your mileage. Accounting, this is where we're going to spend our next few minutes. We have chart of accounts. Now, your chart of accounts is the backbone. They are the backbone of your business, because every transaction that you do in QuickBooks, it involves monetary value, but it also affects 2 or more of your accounts that you set up. Some people call them categories, and that's the same thing if you used Quicken and you had to put it into a certain category, then that you would choose it. If it's an expense, you're gonna choose an expense account. If it's if you buy something that is going to be depreciated. It's going to be an asset. So what you want to do is you want to understand your chart of accounts so that you will be able to read your finance statements, because all of these accounts are going to be, some of them will be in different financial statements. For instance, you're going to have assets and liabilities and your equity, which is the value that you have in the company, on a balance sheet. Expenses and income are going to be on your profit and loss. It's your income minus your expenses. Then what happens there is that bottom line, if it's a negative, you've lost money. If it's a positive, you've made money, which is what we're going for. Okay, so we're going to look at this, and I want you to see the different things here of what they've got. Now, this chart of accounts is for Craig's Landscaping and Design. It's not for my business. It's not for your business. It is for, it is actually, you know, for their business. So yours may not, especially if you're just starting out, you may not have all of these. And if you also see, you can actually view the register here, or you can run a report here. But what you want to do is when you set up your QuickBooks, you want to look at the chart of accounts that they've already set up for you. And you want to go in and you want to modify. For instance, okay, if you do not count your inventory, but you just sell things that are, you know, have value, but you're not counting them as you bring them in, then you're not going to have an inventory asset account. You're going to have, let's see, you will have an accounts receivable. Accounts receivable, if it's not already created, will be created as an account when you do your first invoice. So that's the kind of the thing there. And here's like credit cards. When you set up a credit card, a new credit card, then it's going to become part of your chart of accounts. But that is a liability because it's something you owe. And if you'll look here, we're looking again at the QuickBooks balance, and we're looking at the bank balance. So you would have to go in, and it's called investigation. I said, sometimes I am a private detective. So then if you'll look here, then you've got different payables there. You've got this right here, opening balance equity is where you actually created your equity. If you invested money, if you know, whatever, when you make a profit, it will affect it. This is the profit or loss that you have retained year to year. At the end of the year, whatever profit that you've made in that year will roll into your equity account, and the retained earnings will start again, or your profit and loss will start again, because of January is when, if that's your fiscal year, that's when you will actually begin accounting for those income and expenses. At the end of the year again, when you know whether you've had a profit or loss, or your accountant has done your taxes, or you've done your taxes. Well, you do not want those expenses from last year to be counted this year. So what they do is they roll the actual balance, and it's not something you have to do. And it's just an automatic detail that shows up on the reports. Now you can still run a report for, okay, like now we're in 2021, but if you had transactions in 2020, you can go back and use the date of 2020, and you can still see those, but they are not considered as part of your income and expense for this year. We've got the income accounts. Now, if you'll know, they've got a boo-koodles of income accounts, and you do not have to have that many. You can have one. If you're a retail sales, your income account can just be sales. If you're a service, you can just say service, or you can name it what you want, and you can break it down. Because when we get ready to set up your products and services, then we're going to actually look at where they go on the financial statement. All right, so that's the chart of accounts. And again, we'll probably go over it again as we need to, because this is the most important thing to be correct when you set it up. Because if you set up an asset as a liability, then it's going to make your books completely wrong. So, or something else, you know, like if you have your checking account and you have something that you've bought and you do not categorize it correctly, then what's going to happen is, of course, then your bottom line is going to be wrong and your bank account's going to be wrong if you put it in the wrong place in your checking account. So just, you know, kind of beware of that. That's the pitfall there. All right, so now we're going to explain, I want to explain new. And new, if you have something that you can click on, or you can look at mine, this again is your task, things you can do. For instance, you can do anything to do with customers will be in this list, which is what we're going to be working with today. And anything to do with vendors is going to be in this list. If you have payroll and you do it through QuickBooks, this is where you can go. And other means these are things that you don't do maybe every day or what have you, like a bank deposit. You can do your bank deposit from here. You can also do a transfer. If you have to transfer money from a credit card into your bank account, then what you would do is you would go in and you would have to say, okay, I'm making a deposit into my bank account, but it didn't come from sales, it came from a credit card advance. And so you would choose the credit card. And what that does, it just takes it from one bucket of money and puts it in another. If you have a savings account, which is the most common, some of the business owners, what they want to do is they want to put into the savings account the amount of payroll tax they're going to have to pay. And that would mean that they have to keep it in the savings account separate because they don't want to spend it, so that when it comes time to either pay their sales tax or their payroll tax, that money's in the bank and they know it. They won't come up short. And also, another thing is that if you want to save for something, if you're saving for more equipment or whatever, then you can transfer money from your bank account into your savings account. Now, that be it. When you get ready to pay the payroll tax or sales tax or buy that, you want to transfer it back from the savings account into your checking account and then have it, write your check from there or make your payment from there. So that's what this is, unusual. Journal entries. And I don't know if you've ever have ever talked about with anyone an adjusting journal entry. That means that you are going to adjust something that's already in there. For instance, if you have assets that need to be depreciated, well, that's not money, actual money coming out of the bank or going into the bank. It's one account being adjusted to another account. And what happens is you have accumulated depreciation. So what you're going to do is from that accumulated depreciation, then you can actually know how much of that accumulated depreciation is an expense, because you can take that depreciation as an expense over more than 1 year. If you get equipment that's $25,000, then you don't normally, there are times when there's an exception, I found out, but you do not normally depreciate it or make it an expense that year, because that's really going to be a large expense. And then that the opportunity that you get from depreciation is the fact that if your depreciation schedule and it qualifies for 5 years, then you're going to move that over 5 years. You're going to do $5,000 depreciation expense each year for 5 years. So that helps your bottom line for you as an expense, so that takes up part of the profit. And that would be if you were to go ahead and expense it all, that would happen in one amount, $25,000. And there would be an expense. But this way, you're only taking $5,000 of it a year, then it still lowers your taxable income, but it doesn't just use it all up in 1 year. And if that's confusing, please, like I say, you can get in touch with Tara and we'll work something out because that's not something that everybody deals with every day. Alrighty. Okay. So we're going to go here. I call it a cog. Some people call it a wheel. Of course, it's a lumpy one. And some call it a flower. But to me, it's a cog because it looks like something that would turn something else. You have kind of the same things that you had in new, but you have more. You have your account and the settings for your account. And I'm going to click on that. So before you actually start using, or if you're already using QuickBooks, I would go and look at my account settings, because not everyone knows that this can actually define some of the choices that you'll be making. For instance, right here where it says tax form, you can actually have where, okay, for instance, if you are a sole proprietor, limited liability, small business corporation, or just a corporation, a nonprofit, or just what we call, you could say, a limited liability. You don't have to be specific. So those are the things that if you choose, then your QuickBooks knows a little more about you and things that you might need as far as your business when you're doing your bookkeeping. So small business, I'm gonna say service. I have and if you'll see, I bring up a menu here and it's wanting me to, let's see. It's wanting me to break it down a little more. Traffic, transportation, temporary. And if you can't, let's see. Wow. Maybe I'll do repossession services. I won't, but we're going to choose that. If I had not put services in there, it would have given me more choices. You are able to put your email here, and you do your company phone and your website, and that is not for your books necessarily, but that will go into your invoice. If you set up an invoice with your company information, so that when you send it out, they can see your company information, then that is what will be printed on your invoice or sales receipt. Let's see. Or if you do a billing statement, you have your company address. These are things, that, like I say, they are something you need to set up or you need to correct if they're not in there now. It also allows you, and it says something's not quite right. We won't worry about that because this is a test and I'm not sure why they're having trouble. We have invoice terms. If you give everybody net 30, this is going to be it. If this is, you want to do custom transaction numbers such as invoice, if you don't want QuickBooks to assign it, then you can say on. And when you go to do an invoice, you can put your invoice in there. And if you'll notice here, there's other choices here. And a lot of people, when they get ready to go in and do their first invoice, their first question is, why can't I put my invoice number in here? I'm not starting at number 1. And so that's the other. And then you'll have some more things that it is going to allow you to choose. Expenses. There's not many, not many preferences on that, because an expense is an expense is an expense. It's money going out. So you can make some that if you need them, it's already got these on. But if these are choices that you don't want to see, then you can turn them off. We do have advanced, and advanced is going to be things that you choose here. When did your business, you know, what is your tax year? Is it January through December? Is it July 1st to June 30th, that type thing? And then you have other choices through here that you can customize what you're doing. All right, let's see where we are. In about 15 minutes, we're going to take a little 5-minute break so that you can breathe. And I can not talk for 5 minutes. Okay, so the next, what we want to look at is, if you look at sales. This is what we call the sales center, and it's everything to do with sales. It has those numbers, if you'll notice from your overview that we looked at. Then what we have here is, okay, what do I want to do? Well, you've got an overview, which is probably going to be the same thing once we set up online, get paid anywhere. This is where they're trying to sell you something, okay? You can actually have them, you can set up online and in-person payments, but you're doing it through Intuit. So, you know, you want to make sure that's what you want before you do that. We have all sales. This is all of your sales that you have made, all of your customers that you have invoiced and when they were due. And you have here, the status is whether it's still open or it's closed. Closed means it's paid. So that is where you would go for that information. And you actually have lists. So you could go here and go to your customer list, but here you get so much more information. You can filter it to, so you can go by date or you can go by customer. And by clicking on this top bar, and it will filter them by name. You could filter them by due date. And if you notice, this is kind of like Excel, but this is easier than Excel because you don't have to go up and hit the filter and make all those choices. But that is exactly the format that QuickBooks uses, is the Excel format, comma delimited, I think. All righty, so there's that. Now that is going to be where you get all the information, but not just, you know, it's not going to show you the detail. You have to go in and get the detail. All right, so next we're going to look at, let's look here. This may answer your question. Here it would show how much of an estimate you have. If you've created an estimate, if you'll notice, that's going to be where you have invoices over here. And it would move from the estimate to the invoice once you invoice. So check on this screen and see if you have any monetary amount in there. If you do, then it is not included in the invoice. It should not be included in the sales or, you know, the invoices, because you haven't actually invoiced them yet. And if that, like I said, if that doesn't answer your question, then feel free to call Tara and we'll set something up. This is actually invoices, and it gives you that information. And payment links. This is where they're trying to sell you a service. This is your, if you just want to know who your customers are, it's here. This is product and services. Now, this is a little more detailed. And what it is, it's things that you collect money for. It could be inventory. And if you'll notice, if you have inventory, it's going to show you how much you have that's low stock and how much is out of stock. When you get ready to set up your inventory, now I'm not talking about just if you sell hand cream, but you don't count it coming in, you just want to count it, how many you sold. This is where you actually, if you have hand cream and you get a box of 48, then you're going to enter it as 48 because you want to look at each's, how much is each. And so you have the ability to where you can see how many are low stock because you're going to see where the reorder point is down here. You're going to set that. But if you let it go out of stock, it'll say 0 and it'll have an amount, but it'll let you look at it as to which ones are 0. So these again are your products and services, their list. Now what you have is, now remember we're Craig's Landscaping, so they're very detailed. So just think about your business and what it is you sell. Do you sell inventory? Do you sell things that are not kept in inventory necessarily, but counted as they go out? That's called a non-inventory. We also have a service. So if you provide a service, then you would set that up separate than you would here. So if you see you've got service here, inventory here. Let's see if I find a non-inventory. Let's see. Let's go memo. I'm going to sort by type. I'm going to follow my own instructions here. Well, I don't see a non-inventory. And I don't know why. I guess they don't have any non-inventory. Everything they do is either inventory or service. And that could be, you know, my business is service only. I do webinars and I do Zoom consultations, but I also used to do bookkeeping for clients, but those days are kind of over. So that my business would be entirely different than their business. So you have to look at what type of business that you have. Ready? Okay, we're going to go back. And the first thing we're going to do is we're going to look at new customer, because in order to do an invoice or a sales receipt, you need to know who you're selling it to. If you want to keep track of things in products individually, but you don't necessarily want to keep track of names, you can have a customer set up as customer. And anytime you sell it and want to do a sales receipt but not retain their information, just go to that name, customer, and that'll bring up your sales receipt and it will allow you to put your actual information in there. I worked with a restaurant here in Black Mountain many years ago, and they had an older cash register, okay? And that cash register, it had the different things that they sell, but it would add it up at the end of the day, but it wasn't computerized, so all they knew is the total amount of what they sold for each item. So we set up a sales receipt and we memorized it, which is something that you can do to, it's called recurring. Then you can set up the customer as retail sales. You can set up the sales receipt as recurring, because you can put it in every day. And you can do that. And then you can go down and you can memorize it, okay? That means it'll memorize all the categories. Then all you have to do is go in and put the total amounts. So there's many ways to do different things. Just because you can't see them, you might even go to Intuit, and they may give you some suggestions. If you can, there's an Ask Intuit, and excuse me, the help session, and chat. They'll chat with you. But if you don't want to do that, call Tara. She'll get in touch with me and we'll take care of it. So here you want to put in the customer's name. So I'm going to put my name in here. And you'll notice I'm just looking at information that's already in there, and I want it to use display name, but I want it to, instead of just sending it to Candy Williams, then I want it to send it to one-on-one. That's how I want them to make out the checks to me. I don't know if your bank is picky, but now my bank wants it to be made out to my company and not to me. Used to, it didn't matter as long as I put it in the bank. But so then we have that, and then you have other information that you can put in, and you have your billing address. And if they were to ship something to me, there's my shipping address, which says same as billing address, and I can change it. There's a lot of things that you can do here that would be great for you to kind of investigate. Let's see what we got. Okay, Tracy. Oh, okay. I see you were just answering my question. What kind of business? All righty. So this is where you would go in and you would look at notes. Like you can, like I'm never going to sell to this customer again because they're mean, tax information and different things. So this is something that you might want to go in and you might want to check out. Now you can, even if you've got your own company set up in QuickBooks, I recommend that you go to Google and Google the test drive for QuickBooks Online and kind of look around in it like we're doing today, because it doesn't save it. Once you close out, your information's gone, and it'll give you an idea of where you go in yours, so that you're not just putting information in the wrong place or whatever. So there you go. I guess I'll say save, although it'll go away. Okay, so what I want to do is I want us to take a 5-minute break. And if this is where you can actually think about things that you want to ask, and then which we will try to have time for at the end. If it's a quick question, then if you'll send that question to Tara and she can forward it to me, then what I'll do is I will try to get the answer back to you in the next couple of days. I will tell you, my house is on the market and I'm having a lot of people look at it. And so, but as long as I'm not locked out of my house or people looking, then I'll be glad to answer it for you. Okay, 5 minutes.
Candy, we do have a quick question from Amy who
okay.
just to know, after you purchase QuickBooks Online, can you still see the Craig's example?
Yes, and that's where you can Google. You don't do it from there, but you do go into Google QBO test drive, and it will give you the link, and it has nothing to do with your particular business. It is just Craig's. And again, when you close out, any information you've put in there is gone. So it renews each time. If you were to go out and go in again, your information wouldn't be there. So yes, you can. And I recommend it. I use it. That's what I do if I'm working with a client and I don't want to go in and make so many changes in theirs. that I have to figure out what I did. Because it's not like desktop. You don't just back it up. But yes, you can use that for anything. Okay?
Thank you. We'll let you rest your voice now.
Thank you. Okay, let's get back to work. And if, like I said, if you hope you've written some questions down so that we can answer them later. Amy, I see, I see where you're saying that your problems are in the download area. Well, let me tell you, I understand. When I first started teaching QuickBooks Online, I've had people be upset. I've had people cuss, and I had one girl cry because I was trying to explain to her that she would have to go back and fix it because you can't just go back and redo your company unless you just start all over again with Intuit. So there again, I'm gonna, if you all are having trouble with that, and like I said, it's common. It's not something that, it took me a while, and I mean, not that I'm the sharpest knife in the rack, but it took me a while to understand not what it was doing, but how it was doing it. And so when everything's off, then you know there's a problem and we need to fix it. 9 out of 10 people that I work with on consultation, that is a problem for them. And, you just want to go ahead. Don't worry that, that it's happened. Let's just see how we can fix it. Okay. Let's see. All right. So I've showed you how to set up a customer. Let me go back. Okay, so you'll see that I'm set up here. I've got my email in there. These are informations that you can get. And now it's going to let me create an invoice, create an estimate. If I do have that able to pay, the ability to pay online, I can send a link. I can create what we call a statement charge, which means that if I say every month I'm going to be adding X amount of dollars for administrative, I can start a time activity, or I can create a statement here, which a statement is the total of all invoices that you have sent them that are outstanding. That's another one of those non-posting forms that just gives you information. It's not something that is it's in your books because you did the invoices, but that total is in a report only, if that helps. Okay, so we're going to look at products and services. And what I want to do, if you'll look here where it says new, then do you see where it says inventory, non-inventory, service, or bundle? Well, we're not going to go into inventory or we'd be here till this afternoon. But that is something, that if you want help with, we can do. Non-inventory are products you buy or sell, but don't need to track quantities. Of example, nuts and bolts used in installation. So what we want is, for instance, for me, non-inventory would be if I used to create my own manuals for my classes when they were in person, and I would sell them, but I did not have them in inventory because I was making them myself, for one thing, but another was I didn't need to count them. If I needed to count when I was low, that would have been when it would have been inventory. So let's look at a non-inventory. And this would be, for instance, the heating and air. What you might have is you might have parts that you sell, or you might sell a unit. But normally I would think that you would order it, what we call just in time, when you were getting ready to do the installation. You might have it in stock, but something that big, you might know how many of each you have. So you wouldn't need to set up inventory. The thing about inventory, and then I'm gonna let that go, is that if you set up inventory and you do not track what's coming in to go into inventory, it's going to show 0. It's going to warn you, but then it's going to make your books wonky. It's going to have negative numbers. It's going to have, so if you decide you want to do inventory, I would do it after. If you're not sure, do non-inventory. Then when you're sure, change it to inventory. And then you may have to set up new numbers, but it would keep you from really having problems. A SKU, of course, would be if it's a color, if it's a size, if it's, you know, if you've ever heard, well, I know you've purchased something, but if you ever purchase garments, then you might see the name, or you might see the number of your item, but there's also this little 3-digit number most of the time, and that is telling you either a price, a size point, or color. I know you've been to retail stores and looked at maybe dresses, and they have a dress, but they have it in 10 different colors, bukus of sizes. So, but that might break it down so that the retail owner knows that they sold a pink dress or a blue dress or whatever. Category means that you're going to break it down into a category. For instance, you might want to break it down into jewelry versus bath products. You do not have to. And if you're confused about it, I recommend that you just leave it and not worry about it. And then I sell this product service to my customers. And you're going to put, this is the description, is what goes into your invoice. Or if you're doing an estimate, it would put that in there. So if you had a 9999 account number, and you know the customer doesn't know what that is, you might, but it will bring up the correct description. And so then it would say, you know, it would print out as, oh, this is a television. 100-inch television, how's that? And, but that would give the description. It could be the brand, it could be whatever you want it to be. This here, this is your sales price or rate. So if you are selling a service, for instance, for my service, of course, was consultation or bookkeeping or class training. So if I were to put up here what I wanted to call it, or a number, if I wanted it to be a number, then here my description would be what it is I do. And so my bookkeeping, for example, I have bookkeeping as my item or product, and then I had contract bookkeeping as my income account. And so that would go into the, this would be what they would see when I invoice them, I'm sorry. Okay, your sales price rate, if you have a definite price rate, then you want it to be on all of your invoices and sales receipts for this item, then you can put it here and you don't have to type it in each time. If you want to change it once it gets over into your invoice or sales receipt, you can. The most important thing is how you link it. For instance, and I'll put mine in here so that, since I don't do this anymore, it doesn't make my stomach hurt when I type it. Okay, and I'm gonna put 60, and it's gonna go to services. Of course, I know this is Craig Landscaping, so I know that doesn't have anything to do with Craig, but so I can, you know, I can put it into different kinds of income. I'm just gonna say services. I could set up a separate one that said bookkeeping services so that I can break it down on my financial reports as, and this is what I did, was bookkeeping services, class training, and consultation. So when I'm looking at my profit and loss, then it allows me to get a quick glance at the difference in the totals of those incomes. Now, I mean, I know that my classroom training is definitely more lucrative than my consultations if I'm working one-on-one. But, you know, if I have more customers that I'm doing consultation with and classroom training that I'm only doing sporadically, or I have to wait till the opportunity's there, then it's important to me to know my consultations and my contract bookkeeping, because, you know, I love my classroom training, but it's not something that I know way ahead of time, so I can't plan on it, but I can if it's contract bookkeeping, that unless I quit or they quit me, then I know how much money I'm gonna have coming in each month. And if I do consultation, I can have an average number of hours that I work on consultation too. But so that's the thing that you're wanting to look at when you look at your, you're looking at your profit and loss. You want to be able to tell you a story. So think about that when you set up your chart of accounts, and think about it when you set up your items and what you link it to. You have to link it to an account, an income account if you're selling something, because it will not let you just put in there the account on your chart of accounts. So, and then let's see here, show more. Tax category. Well, mine is non-taxable. And you can also, if you purchase this product, service from a vendor, then if that vendor, you're going to turn around, for instance, let's say that the company that I'm working for, then they're going to pay me, or they're going to charge 60, but I may be doing it for 30, probably not, but I may be doing it for 30. And then it will let me also put, it will let me put the amount of what I pay that vendor, and it'll put it into maybe contract labor. If they're contract labor. And it's going to make me set all this up, isn't it? Expense. Okay, it's going to be cost of labor. And then we're going to have, so that's there. So now when I actually sell it and I pay my vendor, or they pay me, then I'm going to actually have, I'm going to have it on my P&L, the money that came in for it, for the income, and the money that's already gone out to my subcontractor. So there's ways and that you can make things easier for yourself so that you're not having to enter it twice, or but that you know that that's what you're going to have to pay. You can set that up in your time and charges, and then you can also, once the person does the work for you, you can set it up in your accounts payable, which is something else that we'll look at. Okay, so now we have an item, or I have an item, and I guess I'm selling my stuff to myself, huh? So we're going to sell to Candy. I'm going to create an invoice. You see where I check the name. I'm going to create an invoice. Now, if you're doing an estimate, you're going to choose the estimate template, because that estimate template is going to be held until you want it to be an invoice. So it's basically the same. There's a little bit of difference in what you enter. Okay. You see how it's got that automatically that it is due on the 23rd? That's because I have that net 30. Now, if I don't want it to be net 30, if I want it to be net 10, which is a lot of times, or net 15, would be more for me because I'm a small business and I have to pay my bills too. So net 10 is what I usually, let's see, start adding a tag. Okay, I don't think we need with that. Okay, so here is where I'm gonna say what I sold. Bookkeeping. And see where it says contract bookkeeping, my description, but bookkeeping is the product. So contract bookkeeping, if I want to add to it, I might put first quarter. Okay, and then we have got how many, my quantities are hours. So I'm gonna sell them 10 hours of meat and it's $600. Now there's no tax because this item is non-taxable. I've got two monitors, so sometimes I have to find where my cursor is. So you see how it's got this right here? And if that's something that I charge them every month, then I'm going to go here and make it recurring. And if you'll see, you're just putting in the information of when it needs to go in there to my accounts receivable again. Okay, so now we have created an invoice for me. Let's do one. I'm going to do one using some of their information because mine is pretty basic. I could probably keep my books on paper. And the first time you do it, it's gonna allow you to set it up, print and mail. You can set it up to be emailed as an attachment. Most popular, I'm just gonna say some other way, finish. Okay, so now I'm ready to do my invoice. So let's see who, I'm gonna look at, let's do Amy's Bird Sanctuary, this is how Amy's set up in this test drive. You're gonna be, if you use the test drive, you're gonna see the very same thing I do. And Amy, we're going to do net 15. And we're going to do a product or service. And let's see. That's a design. Let's look at something that's real. I'm going to put sod out for her. You see where it says the amount? Now it doesn't say what the amount is here because she did not set, or they did not set up an amount. Let's see. Sprinkler pipes. They did set up an amount for that. And they, so you put in the quantity and she put in how much each was. And then so you go in and say, you want 50. That's a big yard. So it automatically, this is California tax, by the way, you would set up your tax if you, and there you're gonna have $216 that they owe. So I'm just gonna say save because we don't wanna send it because it's not real. Next thing we wanna do is we have sent out those invoices. That means they haven't paid us yet. So what we're going to do is we're going to let them, do you see here where it says receive payment? These are the people that owe but have not, have not paid. So let's go to Amy's. Oh, she owes more than what I gave her. Okay, Amy's Bird Sanctuary. Do you see where there's 2 invoices that I sent her? One is due now or has been due for a while, and this one is not due till June 8th. So if she paid both of them, I'm going to check both of them. And then it's going to show me what the total is. And we are also going to do a payment method, the date she paid, the payment method. And if it's a check, you're going to put the check number. Why would you do this? Well, the reason you would do this is so that if you need to search and there's a advanced search, it will let you put in numbers. It'll let you put in amounts. It'll let you put in names so that it'll bring up all the transactions for that particular query of what you have been, what you're looking for. Okay, so now I'm going to say save and new. And now we have received a payment. And that payment, when it went to undeposited funds. I need to explain this. Undeposited funds, and this is another thing that can be confusing. What that means is it's going into an account instead of this amount going into the bank. Right here. Oh, I see some. Let's see what we got here. Normally, in most cases, the discount is before the tax because you're only taxing the amount that they're paying. What tax is, of course, is that you are getting the tax, but it's not for your business, it's for the North Carolina Department of Revenue. If people are not questioning that, and that's what you want to do, you can't. But that would kind of mess up your totals on how much tax you owe. And if you collect more tax than QuickBooks says you owe, you have to send that in. Now, will they know that you don't send it in? Not until you're audited. And if you're ever audited and you collected it, then, that's obtaining money by false pretenses or something. So I would either make sure to use the correct amount, the sales amount, before the discount, instead of the total amount that, that went into the sale, or just wait until you put the discount on it. I'm not, somebody might actually question that, but Amy, if you are doing large installations, then you're only going to be doing the products, and so they may not question it. I just, whichever you want to do, I guess, but most people do not, that I know of, do not do it before you do the discount. Because let's say you do 10%. Okay, so, and that 10% comes to what, $140 or something. Then what's going to happen is your sale is going to be, it's not going to be the exact amount for you. The tax will be what it is because you're putting that in there. But the amount of the sale is going to be, normally it's after discount. So I'm afraid.
Yeah, I think it's weird that Intuit puts it, like I always have to swap it. Is there a way to make it permanently so that it does the sales tax calculation after you put in the discount amount?
That's where you go into that setup for
Okay.
sales. And when you go in for your account settings, look for it there.
Okay.
Okay. And if it's not there, then tell them you want to chat with them. But I mean, they really know their stuff. You know, I'm laughing, but yeah, a chat's better than a phone call. But yeah, they really know their stuff. So I would do that. And then, like I say, you may have the option. Some states, or if you're here, right, in North Carolina, then some states might require that. So
that's what I wondered, because I think it's weird that it has that even as an option.
Mm-hmm.
Mm-hmm.
So that if you'll just, you know, and when you set up your sales tax, did QuickBooks set it up for you? Did it put the amounts and everything, or do you remember?
I think it pretty much did it for me. I don't think I had to put in a lot of information.
Okay, so that's where what I would do is go and check out the settings and see if there's an option there.
Okay.
Okay, because I know that anybody that I've set it up for here in Black Mountain, North Carolina, it actually, you know, it's after I give the discount, then the tax is applied. Does that help?
Okay, I'll look in settings.
Okay. All right. Let's see, was there
question was
one?
Is a bigger one. Yeah. If you're late, yeah.
I appreciate your question.
This is where things are going wrong.
Well, that's what I want this to do, because when I do some of my classrooms, it was from do QuickBooks from the very beginning. Well, I went over so much information that the people that were already using QuickBooks, it was kind of overwhelming. But now what I do is I show you an overview of what you should have done. And then we go into detail and how to do this stuff correctly in case you have questions, or in case you're doing it incorrectly. You know, if it looks logical to you, and I know with me, QuickBooks I know, but other things I don't, like baking. I'm not a baker. And so I can't just assume things in baking. I have to look at the recipe. And so that's why I tell everyone, you know, staff to your weakness if you can, but I can't afford a baker. So I have to, if I do it, then I have to look at the recipe. So it's just it's what logical to you. But if you're not sure, always go to the help section or chat for to get the answers, because there are no dumb questions and there is no QuickBooks police. Okay. There's not going to be somebody saying, oh, you're doing your QuickBooks wrong. You have to figure that out when things are wrong. Okay. Are we good?
So on this part where you're doing the receiving, you're linked with your bank account. Do you still, like when you see QuickBooks alerts you, QuickBooks tells you, okay, your customer paid. Do you still need to receive to that invoice, or do you do that by categorizing the payment?
Okay. Now, you can wait until you receive it. But if you put more than one check in the bank at a time, now mine goes in one at a time when I receive them because I do it over the internet with my phone. But if you actually fill out a physical deposit slip, you may have checks for 4 different people, or even cash and checks for 4 different people. QuickBooks knows it, but the bank doesn't. All the bank knows is a total. So it's going to be looking for that. And so that won't match anything. It'll just say, do you want to add it? If your checks go in individually, then when it comes through, that amount, if it's the exact amount of the invoice, it's going to trigger a possible match. And then it'll let you choose the invoice that's correct. But you have to be really careful with that, because if it's not exactly the right amount, if they give you extra just to round it up, then it's not gonna, it's not gonna match, but not many people do that. So, but yeah, if you receive your payments and 4 checks are gonna go in from 4 different people, then that needs to be received. And now I'll show you next what you do, okay? So that you can understand what I'm talking about. All right, so let's go to, I'm gonna go and make a deposit, a bank deposit. Now what this does is it brings up, do you see this right here? See where these payments were received? Well, these total that are eligible to go in the bank at the same time, because you don't go to the bank every day. And that's what the total, that's what you would see when you download transactions from the bank, a total. What you have in QuickBooks are invoices that are broken down. So QuickBooks sees it, but the bank, the only thing the bank sees is this amount right here. So now if you've got Amy's in there, if that's what you are, only thing you're going to be putting in the bank, then QuickBooks is going to say, ooh, that matches this invoice, or it matches 3 invoices or whatever, but it'll give you the option of which invoice is paid. But if you do these together, then it's not gonna match anything. It's just gonna put, if you say add, it's gonna put that amount of money in there. And then when you received your payments, you told QuickBooks that you had received them. So that amount of money is gonna be in your money to be deposited, but these invoices are gonna show paid. Here, it's just putting an amount of money. Okay, is that okay? Or did it help?
I don't know. I think the receive payment and bank deposit thing, that's when I match it. I have too many things. Like I'll have a deposit and the invoice that it wants to like match. And then it's like in there twice.
Okay, if it's matching, that amount is matching an invoice. Let me show you.
So I wasn't sure with when they pay by credit card and they've paid it, do I still receive payment, like hit plus?
Okay, do you have a batch at the end of the day?
It does batch the credit card payments, and I've been breaking those out and splitting them out, but that's like also causing problems.
Well, I was going to say, it has to be one way or the other. If it is going to be broken down by customer receipt, then you need to receive the payment, say and you're depositing that money in the bank so that when it does come through, it'll match. If it's an amount that's a single amount, like that $455 from Amy's Bird Sanctuary, then it's going to trigger something and it's going to ask you, well, what is this? And then let me show you.
But it seems like if I receive payment, then QuickBooks freaks out because it thinks I already have the credit card payment and it won't match it. Well,
what it is that it'll say that, do you want to matching means that I've already done this. So yeah, this matches this. So, it's okay. It's not putting it in there twice.
But it'll show the deposit and the invoice there for me.
Well, where's it showing you that? Here?
Like where it says like records found, then it shows 2 records for the same amount. It'll show the deposit and the invoice.
I am not sure.
And so then I was not sure. I was like, well, maybe I'm supposed to receive credit card payments first.
Get with Tara, because I think we need we need to go over yours. you know, so that I can see.
Mess this receiving stuff. Yeah.
I want to see, you know, I want to see what you're doing, because do you see how
yes,
if I say match,
twice.
Is that what's coming up?
Yes, but it'll show it there as the invoice and the deposit.
Okay, it should. Well, if you've already made the deposit, but you know, and this is still showing, then it's not. It's adding it twice.
Yes.
That means you've had two things happen. So I don't really want to confuse you. So, like I say, get in touch with Tara, and I'm you know, I'm available almost all the time now, except Wednesday pretended well. But yeah, so let's, you know, just start making your list of things that we've talked about that, you know, you have questions about, and I'll walk you through yours, and so that you'll know which steps to take in your QuickBooks. Okay.
Thank you, Candy.
Big question. Like, maybe does every invoice require a receive payment?
No. And I'll tell you, I think do we have another question, Tara? Tara?
Yes, sorry, I clicked off the screen for a second. So question from Tracy. She says, with QuickBooks Pay Quote automatically adds the payment towards the invoice. They used to not do that. She went into receive payment and credited the invoice. QuickBooks had put the deposit in undeposited funds, and she had overlooked it, and she had to adjust the deposit.
Okay. If you have actually received, you've said add and you shouldn't, then there is a way that you can have it undo that add, so that you can do it correctly. If you, let's see, let me look at this again. Okay, it will only add the payment toward the invoice if that payment is what you billed them for. If you only billed them for the payment. If you bill them for the full amount, let's say the amount is $4,550, and there again, they pay you that 10% of $455, then the bank amount and the QuickBooks invoice amount are not going to match. There's nothing to trigger it. There's nothing to know. They don't go by name or anything like that. Only thing they go by are amounts and invoice numbers. And there's no way to put the invoice number. The invoice number doesn't come through from the bank. So I would recommend that you kind of just go back and look at it and see if it's in there twice. If it's in there twice, then the one that is just a deposit and not the payment to the invoice, you would need to delete, and that should help. Does that help, Tracy? Okay. Let's see what else we got. So.
Yes, thank you.
Okay. Anytime. You know, these are the things that like Amy and Tracy are asking. And they are questions that are not really, it's not really something you see. It's something, most of the time, my questions from people are things that I know how to get around to find that they don't necessarily do. So it, you know, there's like, you look at the downloaded transactions, those downloaded transactions, you know, it says, oh, okay, I'm going to add, because that really did happen. Well, if, like I said, QuickBooks doesn't know if you have already added it before, like if maybe you put it in as you went, maybe you wrote a check, but you didn't put the check number, or maybe the numbers are different. This amounts that you see here in the banking, these are, like I say, it's like looking at your bank statement, but that doesn't mean that every everything should be added, okay? It should be, if it, like I said, if it's already in there, you don't want to put it in twice. But if it's going to try to match it, then, once it does, then you can, you can feel good about it if it's something for you to kind of look at. Most of the time, expenses, I don't know about you, but when I use my debit card, I wait until it downloads to put it in. So there's no question that I haven't put it in there. So when I add that expense, which here it says uncategorized income or uncategorized expense, you would need to change it to the correct category. But once I said add, it would put it in my check register. Now, if I had already put this in as an accounts payable and paid it with a check, but the bank, I put in I wrote a check, but I didn't put the check number in there, it's going to tell me to add it again because that doesn't match. The check number and the amount don't match anything. So think of it as it's looking for things, when you do a query and they give you things that you can do. Let me show you. Advanced search. So it's kind of like this. If you go to and you want to know a check that maybe you've done, then you can put the payee in there, and the payee would be here. Or you can go by amount, and it says amount equals or contains. So you have different things that you can actually look for, and it filters it down. But it has to find those before it will actually tell you that that's what it is. So when you're looking at the transactions that you're adding, look, and if it's something like I say that it's an expense and it is what it is and that's the amount, go ahead and add it, because if you have it in there twice, that is very easy to delete. But deposits and payments that people give you, things that you pay, accounts payable, which we'll go into on Thursday, those are the things that are more difficult to straighten out. But if you're just straight putting money in the bank and say you got it for the income account, contract bookkeeping, or daily sales, you can adjust that easier than if you have things broken down in any way. By check number, check number. If it's a payroll check, those are very, very complicated to fix. So if you put that payroll check, let's say that you wrote somebody a payroll check, and then the bank, when it came in, the bank had recognized it as a different amount. I don't know if you've ever had that happen or not, but it can be off a penny and it won't match it. So those are the things to be cautious about. And when you do, it's better to check it and make sure than to assume, that what you're doing is right. Because, I don't know about you, but there are times when I second guess myself, and it's happening more and more as I get towards 70 here. But I do, and then I have to go back and check. But I would rather do that than to assume I'm doing it right and put in 10 transactions the same way, and then have to go back and correct those. Because, that's going to take time, especially if you have a lot of transactions. If you don't have very many transactions, then, I'm not saying go ahead and do it and fix it later, but it's not as difficult, because every time you change a transaction, it's going to change something else. For instance, if you delete a check that you've written, then if you delete it, it's going to change your bank account amount. But it's also, if you've already reconciled and said, oh yes, this is exactly what happened, then you go and delete the check, your reconciliation is going to be off. So then when you get ready to do your next month, the beginning balance is going to be off. So those are things that we want to make sure that you know the right way to do it so that you can actually, you get good balances, or you get correct balances, I should say. Now, a lot of people do not reconcile their bank account, except when they go online, they make sure it's okay. But if you reconcile it in QuickBooks, then what you're doing is you're saying, my books agree with the bank, which is what you want it to do. If you're ever audited, well, they'll look at your QuickBooks, but they're going to want to look at your transactions and your bank statements, because what the bank says happened, anybody can change what happens in QuickBooks. And so it may not be something you meant to change, but they don't, believe you me, they don't take that as an excuse. I ask them. So, if you've got something and you're in doubt, then please, look back and see what happened. Okay, let's see what we got here. Sorry, loud environment, Tracy. Okay, so that right there, we're gonna, if we have more questions, I would like for you to go ahead and put them in the chat, and then we can answer them. And I want you to remember, there are no dumb questions. People say, oh, this is a dumb question, but, or I'm a dummy or whatever. Well, no, because I've probably asked those questions at some point and had to look it up. I know when I do my certification, they ask questions and I have to look them up because it's not something I already know. So we can go ahead.
Okay. I have another question from Amy, who I know you're going to do coaching with.
Yeah, you might as well just set this up. I mean, if you split a transaction, how do you grab an invoice? Often the bank transactions include a payment toward an invoice, maybe a client deposit. Well, when you make those, when they have made a payment, okay, then that goes into, that amount goes in to be deposited, whether you do it as a undeposited funds or if you just deposit directly to the bank. That amount that actually happened in the transaction is going to be triggered by the amount that comes into the bank. We'll use that 4,550, and they paid 10%, maybe as a down payment. Then you receive that as a payment, but that 455, then that is going to be the payment you received. So therefore, that's going to be the amount the bank's going to show. And so it's just going to match it and say, oh, this matches. So we're not going to put it in again. Because if we put it in again, she's going to have it in there twice.
But if it's a batch deposit, and
well, if it's a batch deposit, then that one has to go in separately, because the bank is not going to know that it's a payment towards an invoice. Now, one thing you can do, if you receive payments and they go in individually, then if it comes through and you want to check off those 3 versus that deposit, you know how if you might have a deposit of $5,000, okay? But that might be 5 checks and each one $1,000. So when you receive the payment, if it shows 1,000, 1,000, 1,000, 1,000, and 1,000, but yet it shows 5,000 on your bank statement, then you're gonna check those off as being correct because the bank said you deposited $5,000. So, I mean, there's different ways, there's different tricks, there's different, it doesn't have to be, what you need to be concerned about is when the bank doesn't catch it and you add it, but you've already taken care of it another way. Now, if you know you've deposited 5 checks for $1,000, each. Then when that comes in and it's $5,000 deposit, you know those have cleared. Because when you check them off, you're checking off $5,000. When you do reconciliation, you're checking off the $5,000 as if it was one deposit of $5,000. So yeah, you can do it that way. But like I say, when we write all this down, because I don't remember
pages of questions.
Okay, well that's what I'm here for. But yeah, I mean that's a good question. That is a very good question, because there's no way of knowing that that whether that happens or not. So the only way to do it is for us to look at it and show you what happens. Okay.
Thank you, Candy. You have another question from Sandra. She wants to know if you know how the mileage app works.
Yes. Now the mileage app, and let's go into it here. Then you can actually go downloaded trips, view vehicles, unreviewed. You're going to add a trip, and you set up your vehicles, which it will list, and you will create a trip. You can also incorporate mileage. I don't know what, I guess you might have an app on your phone or something, but you put the date and the distance. This way, okay. The distance is going to be, I'm going to say 34 miles, because that's my round trip from Asheville business. And then where's the place for the, well, oh, please enter the trip details for business trip. Client in Asheville. Okay, now what you would have set up before is what mileage you get. You would have to set that up in order to, and I'm not quite sure where that goes. Let me see. Well, let's see, let's submit. See what we got. Well, it's not letting me. I apologize. Apparently I didn't set it up right, but this is the screen, and there's got to be a way for this to go into here. So review business personal. Well, maybe I didn't know. But if you want to email that question to Tara, she can send it to me and I will find it out. Because apparently I don't do it very often. So apparently I haven't looked at this in a long time. And it's that I don't know how to do it. It's that I don't know where I go to do it. How's that? Okay, let's see what we got. Okay, any more questions? We got 3 minutes.
Do you know, how do you usually categorize sales tax? Like what, because it's a liability, right?
Well, when sales tax is set up and you're doing an invoice or sales receipt, it goes into sales tax payable, which means you can go in to pay your sales tax, and it's under taxes on that left bar, and it will show you how much you owe.
So when the transaction comes in from the bank,
it should be the same amount that you paid them. Because do you pay it online?
Mm-hmm.
Okay, so the amount you pay online should be the same amount that they tell the bank that you paid.
But then when I categorize it, it won't let me categorize.
Okay, you shouldn't have to categorize it, because when you go and tell QuickBooks that you've paid it, QuickBooks should know that amount.
I agree, but but when the bank transaction downloads, the category is under like one of the generic ones.
Okay, so what you need to do, since you've already told QuickBooks that you've paid it, then you just need to ignore, you know, how you have that over on the left at the top, and you can review it, you can exclude it, you can, then if you know that you already have that in your check register, then exclude it. Because if you don't, it's going to put it in there again.
Mm-hmm.
Because that's exactly what happens. Okay. I want to thank you all. You have been a great audience, even though I can't see you. And I hope that you're going to be attending the Thursday webinar, which is we're going to talk about vendors and expenses. And we're going to be talking about reconciling your bank account and what to look for. So that may help answer some of the questions too. Thank you.
Thank you so much, Candy.
I won't say I'll hear you. I'll hear you all on Thursday if you're coming back.
And it's on Wednesday at
Wednesday. I'm sorry. My days are off.
Excuse me. You did have one more question from Sandra. If you want to take a minute, and if people have to drop off, we totally understand. We appreciate you.
Yeah, sure.
So she says, I have some sales that are wholesale. Is there any way that I set up a tax exception and keep track of it?
Yes, you should be able to take the tax. You should be able to put in there, there should be an option of what type of tax, like, you know, that one I have had California, then you should have the option of exempt. Because QuickBooks, you know, they don't keep track of wholesale retail. They keep track of taxable and non-taxable.
Great. Well, thank you for taking the time. Thank you all for being here. We hope you got part of it, and we hope, like Candy said, that we see you again at 10 a.m. on Wednesday. Thank you, Candy, for your expertise. And I'll go ahead and close us out. We appreciate you all.
Okay, have a good night.